Hello and welcome. You're watching KYC. It's a brand new show standing for Know Your Company. It's a brand new show at NDTV Profit. It's a fast-paced world of stock markets, and in this fast-paced world, investors are bombarded with information. But what they often lack is deep, comprehensive understanding of companies that they invest in. KYC, Know Your Company, is a show designed to give regular investors powerful, actionable insights into the fundamentals of single NSE listed companies. And this is one company a day. So today we'll talk about Sky Gold. It's a company which is in the business of designing, manufacturing and marketing of gold jewelry. It's also mainly in the mid-range segment, and it's more in the B2B model is what the company follows. It basically manufactures for some of the very, very reputed B2C companies in the industry. And let's pull some of those up. You have a Malabar Gold, you also have a Senco, a Kalyan, a Caratlane, among others that Sky Gold targets and tries to tap into in terms of their market share that they sell to others. Now, in terms of revenue mix, how is that really shaping up? Currently does 91% in the domestic market and just about deals with 9% of exports. So possible to maybe expand that segment or not, maybe something that will be interesting to watch out for. And within the business mix as well, 65% is corporate and 35% is others. They plan to elevate the corporate business share to 100% over the next 3 years. Going to be interesting to see whether that actually plays out. Of course, along with so many things happening. Now, in terms of just breaking up some of the metrics, and that's what we do on every show of KYC, we'll start off first with understanding what the income statement will look like, and thereafter we'll do a balance sheet check. We'll also look at return ratios and try and break those up along with cash flow. And we look at the shareholding pattern, the street cred, and how the stock has basically performed, as well as what kind of dividend the stock has given over the last few years. We'll also look at what the analysts are saying about the company before we dive in and do a stock analysis, a SWOT analysis, I beg your pardon, which is to try and break down what the threats also could be, along with opportunities, strengths and weaknesses. Okay, but Mahima is going to join us. Of course, she tracks the sector as well as the company more closely. Mahima, start off. Tell us what the income statement looks and how is it shaping up to you?
Absolutely, Harsh. So this income statement looks, great. If we see the four main parameters in terms of revenue, the stock has seen a 3-year CAGR of 30%. In FY24, the revenue stood at around 1745 crore. In terms of EBITDA, the EBITDA CAGR has been 81% in the past 3 years. So for FY24, 77 crore was the EBITDA number. Margins are at 4.4% and they've remained in that range for the past few years. In terms of the net profit has seen a CAGR of 100%. So net profit for FY24, the number was 40 crore. So in terms of the income statement for this particular company, it's a thumbs up all over.
Okay, thumbs up all over with regard to the income statement. Let me switch over to the balance sheet. Now, one piece, Mahima, when it comes to jewelry companies, is that your balance sheet keeps expanding in terms of their working capital requirement, because inventory keeps going up.
Right.
So as you grow your top line, your inventory keeps going up.
Right.
And therefore, the important metric to look at here is your net worth. Net worth in FY24 stood at 244 crore at the end of the year. Now, at the end of the year FY24, the inventory level was also quite elevated. It was at 260 odd crore, roughly. In terms of other metrics, and let's look at the cash and bank balance, of course, gross debt, very important. 300 crore of gross debt, which kind of makes sense because the inventory levels have gone up, and that kind of counters the gross debt. But they are sitting on healthy cash balances, 77 crore in comparison to the 240 crore of net worth. So a fairly healthy cash and bank balance that they are sitting on as well, and gives them bandwidth for growth, because this will, some part of this will go to funding inventory.
Correct.
For the purpose of adding more to your top line.
Absolutely.
But that's how the balance sheet is shaping up, fairly neutral, largely because you have a large debt versus your net worth. 300
Right.
crore of debt versus 244 crore of net worth.
Absolutely.
So we'll give it a neutral
Absolutely.
where the balance sheet is concerned.
Absolutely. And just to add to that, the management has also said in their con call that with the kind of demand that is already being seen, in terms of the festive season also going on, it makes sense for them to kind of take working capital and make sure that they have enough inventory in store to make sure that the demand is met, which is why you're seeing higher debt levels.
Right.
Moving on to the return ratios, in terms of the return on equity and return of capital employed, the trajectory has been kind of decreasing when it comes to both return on equity as well as return on capital employed. If we check the numbers in 2022, return on equity stood at 28% versus that of 24% in the 2024 year, and return on capital employed in 2022 was around 16% versus that of 14% in 2024. So in terms of the return ratios, we are seeing a slight decline, which is why I think we've maintained a neutral stance when it comes to return on equity as well as return on capital employed. But in terms of cash flow, Harsh, I think because of the high working capital, the cash flows are taking a significant hit here in terms of operations as well.
Well, and it makes sense because you have a company investing capital at around mid-teens in terms of the return on capital employed. And therefore, for that kind of a company, the better thing to do is to reinvest that money straight back into the business. And that's exactly what they seem to be doing, investing in growth. And therefore, your cash from operations not looking extremely healthy. But you look at net cash flows as well, and that seems to be on an improving trajectory. Both of those metrics seem to be on an improving trajectory. So the one possible positive is at least it's on an improving trajectory, but majorly still in the negative, Mahima, where cash flow from operations is concerned.
Yes, but that's something, so this is something that they need to improve on going forward as well. But moving on to shareholding. Now, we've seen in the past 1 year, we've seen that promoters have been selling stake in a lot of companies, but this company has seen, a strong promoter base. In fact, their promoter base has increased from 61% to 62.5% in the last quarter itself. And in terms of the overall promoter stake right now, it stands at 62.5% in September 24. In terms of FIIs, they hardly hold around 0.25% share. DIs have no holdings right now in Sky Gold, but public, the retail interest also is very high in this particular counter, where public, however, quarter-wise it has gone down from June to September, but public still holds around 37.2% in Sky Gold so far, as of the numbers present on September 24, Harsh.
Yeah, and I want to try and highlight how the street views the stock, because it's been such a strong performer over the last 6 months. Of course, the 5-year share price return is 19x, so it's been a 19 bagger over the last 5 years, pre-COVID to now. But when you're looking at the last 1 year performance, it's up roughly 4x, which is given a 293% kind of return. But more importantly, it's a large part of that has come in the last 6 months. So the last 6 months is where a bulk of those returns have come through. And you've also seen promoter buying. So both of those kind of, giving a signal to investors that promoter confidence is high despite the kind of stock performance that we've seen. 266% is what it's done in the last 6 months. It's been a 3.5 bagger.
Right.
Extremely strong in terms of share price return. So investors certainly have nothing to complain about despite that negative cash flow.
Yeah, but there's one thing that investors might complain about, and that's the dividend part of things, because FY24, the dividend payout ratio was around 0.9 versus that of 2.1 in FY23. In FY24, it came down to around 3% versus that of 12% earlier. So, and this is of course because I believe that the company is trying to focus on kind of buying more working capital and making the demand which is met, making sure that the demand is met, which is why the cash flow is moving towards, the expansion rather than, giving it to investors. So I believe that dividend is one part that investors are kind of not happy with. But going forward, so this is something that will be on the watch out for, that once if the cash flows turn positive, how will the dividend, payout ratio be like?
Yeah, dividend payout is something which may be important, 100%. But again, for a company making returns of around 15% on its capital, I don't believe investors would mind too much if dividend were to be lower. And that's exactly how, even in terms of the stock price returns, that's what it's seeing. In terms of how analysts are viewing it, just about one analyst tracking the stock, having a buy rating, and therefore not widely covered in that sense. And that's why the neutral rating on this particular count. So while we have a neutral rating on that, because of the lower street coverage on the stock. So that's something that investors should particularly be wary about, because the lower the analyst coverage, the more the risk, of course, of something going wrong. But let's try and sum this up, right? Mahima, let's put it in a nutshell. You have your income statement, which has shown very healthy growth. Your balance sheet, largely neutral, but that is also because of the amount of debt that's gone up. Okay. We spoke about inventory levels going up and therefore debt going up. Cash flow is currently negative, but fast turning positive. But it's that kind of a business. That's the nature of the beast. Return ratios, not the best, but their ROEs are at 14 to 16 odd %, which is again not bad. Your shareholding, currently promoters own roughly 62.5%. They've continued to hike stakes, so that's a positive. Street cred is definitely a positive because the stock has done very, very well. Your dividend payment, virtually zero. High growth businesses, don't reward as well and therefore justified, but negative nonetheless. And your street coverage is largely neutral because you have just one analyst covering it. And therefore, on our ratings counter, it stands at 4.5 on 8. And therefore, that's how it really pans out. But let's move on to SWOT, Mahima, because that is more subjective than objective. We've given the objective view. Let's talk about the subjective.
Absolutely. So in terms of strength, I think Sky Gold has already, taken on board big ticket clients like, you mentioned Senco, Kalyan Jewellers, Caratlane, Joyalukkas, etc. And Caratlane is one of the recent additions. And in the con call, they've also said that they're trying to get Titan also on board. So if, the biggest jewelry player in India, listed player in India, if they can onboard that, it's a big thumbs up for them. Other thing which really, boosts up demand for this company is the festive and wedding season, which is, going on right now. And we're seeing a lot of gold buying and a lot of studded jewelry buying, and we're also seeing gold prices going up because of that demand. So these are the true strengths of the company. In terms of weakness, while we're seeing good strength in terms of wedding and festive demand, overall demand throughout the year, that's 12 months round the clock, the urban consumption is slowing down. People are now moving towards, in terms of studded jewelry, are moving towards the lab-grown space and the mosaics of the world, which is why I think that this could probably pose a weakness for the company. And the company has still not diversified into lab-grown diamonds. Of course, we did speak to the management and they've said that they're considering and studying the lab-grown diamond space, but they've not entered into the lab-grown diamond space yet, which could pose some weakness and which could kind of weigh down on the company.
Yeah, I mean, you've said it. So what could opportunities be like for the company? They've not yet ventured into lab-grown. Lab-grown is a huge opportunity. Trent has spoken about selling lab-grown and could well be, if Titan is one of those on their list, Trent could very well come on the list as well. So that's one. The other one is that the jewelry market in itself seems to be expanding at a robust rate. The growth rate is around 15 to 16% currently, and the organized segment is growing much faster than that, 18 to 19%. In fact, you had an Aditya Birla start off its own brand in jewelry at this point, which clearly means that they are allocating capital and they believe that there's an opportunity there.
Absolutely.
And they're trying to tap into that opportunity, and therefore Sky Gold could well be well placed with regard to tapping into some of these opportunities, given that it's one of the only players which actually does this, only structured listed big player which does this, and therefore could well be on the list. In terms of threats, well, gold price fluctuation is definitely a threat. Gold prices have been on an elevated level, and therefore, because Sky Gold is simply a contract manufacturer, the demand will start to fluctuate as the gold price starts to increase. And that could well be a risk, right, for someone who's just a contract manufacturer and who makes a margin on the gold that it actually designs and sells to its clients and customers. The other piece is the lab-grown diamonds are actually hindering the demand for natural diamonds. Natural diamonds are higher ticket, lab-grown diamonds are lower ticket. Sky Gold doesn't do natural diamond, doesn't do lab-grown diamonds. It only does natural, and therefore you'll see some amount of demand coming off with regard to natural diamonds, which could well be a huge threat. Whether they convert that or not is something that we'll have to wait and watch out for. But for the first time on this show, we've tried to also dissect the latest news that's come out with regard to the company, which will hopefully give viewers a better perspective. Mahima, I'll hand it over to you for that.
Absolutely. So recently the company has raised a QIP of roughly 270 odd crores, which they'll be using for their working capital needs first of all, and of course expanding into key regions as well as the new clients that they've onboarded and the new acquisitions that they've made. They'll be using this money towards expanding demand for coming in from these clients and acquisitions, and they also aim to increase their addressable market overall from 35% to 70%, which is almost doubling their addressable markets, which is where they'll be using this money as well. So first off, they've raised a QIP of 270 crores, which is a thumbs up for them. And like I mentioned at the start, they've recently onboarded 2 new clients, that is Caratlane, and they recently listed PN Gadgil as well. So adding both of these to their portfolio is also going to augur growth for the company going forward, because they'll be catering to demands of these 2 new big players in the jewelry space. But Harsh, talking about how the company is growing, they've made 2 very interesting acquisitions. I think well, and you can talk about that.
Yeah, so 2 acquisitions. One is Star Mangal Sutra Private Limited, which obviously, as the name suggests, is into that segment where the Mangal Sutras are concerned, and therefore the demand for that likely to rise, at least in the near term, given the number of weddings that are in the pipeline. You also have Sparkling Chains Private Limited, which it has acquired. So both of those acquisitions to add healthily to the diversification strategy for Sky Gold. So that's one. Second is production. Volumes have continued to rise. Your monthly volumes have seen significant increase. In fact, from 200 kgs last year, it's seen a significant increase, and capacity utilization still is quite healthy at 46%. In fact, subsidiaries are operating at just about 30 to 33%. The company continues to push new designs, 2,000 new designs coming through monthly to cater to all of their clients, and the size in terms of the amount, in terms of the revenue contribution which Sky Gold does to its clients is still very small. So the kind of opportunity available for growth even among existing clients is very, very large. You have new initiatives. They've launched a trial app to facilitate real-time orders from customers as well. So there are certain new certain new initiatives that they've taken as well to try and grow the business better. Right. Mahima, with regard to company guidance.
Absolutely. I'll quickly go through the guidance. They're targeting 6,300 crore revenue by FY27 and 5,000 by FY26. They expect to turn cash positive by FY26 is what the management has said. And they anticipate 25 to 30% growth in the retail space. And overall, the 2 new acquisitions will contribute around 500 crores by the end of Q4 FY25 is what the management has said, Harsh.
Well, yeah, so those are sizable. But with that, Mahima, let me thank you for joining us and for breaking this down for us. But without further ado, let's now shift focus to the management itself. We managed to catch up with the whole-time director, Darshan Chauhan, earlier. And here's what he had to say on the company's growth prospects going forward. Listen in.
going to the festive season. There's a huge marriage season in January, December, January, February, and March. So it's highest in India, 25% more, which is highest of the years. So 4.8 million weddings are going to be in India, which is highest of the years, and which is going to create a 6 trillion of revenue, in which jewelry will contribute to 25%. So there is a huge demand for the marriage this year. There are records broken in this year for the marriage season, and we are also receiving a good orders from all our corporate clients, and giving there is a good feedback that there is a huge footfall for marriage season. So marriage season is going to continue till February, March, and then again Akshaya Tritiya, the hugest festival of jewelry, is coming ahead in April month. So we will be preparing in second quarter for Akshaya Tritiya. Now we are busy with marriage season orders. So there is a good demand in the market for marriage.
Right. Mr. Chauhan, you're also, planning and going big on international expansion. You're targeting international markets such as Middle East, UAE, Singapore, and Malaysia for expansion. I also want to understand, because, you've also raised funds. So I believe that you'll be using these funds to, kind of expand your exports as well. So I want to understand how exports will be 2 years down the line. What will be the mix be like, export versus domestic?
So we are recently in 2 quarters going in the way of 9 to 10% of the revenue from the exports, and we are targeting it to take it to 12 to 15% in next 2 years. So majorly we are concentrating India, because India is a huge market. So we'll be rely on India for 80-85%. We'll not take exports ahead of 15-20% of the revenue. Going to the expansion, we are expanding in Middle East, especially in UAE, like Dubai, Qatar. There is our existing client like Malabar Gold, Kalyan Jewellers, Joyalukkas, all opening store in there also in all the UAE countries, in Singapore, Malaysia, and we are supplying to the corporates available in the UAE, which are major in Singapore, Malaysia, and UAE. They are also expanding their store drastically. They have expansion more. So we are concentrating in our products is made for the Asian countries. We are not, our product doesn't match to Europe or European countries or US countries. So we concentrate in the Middle East on the Asian countries only. And our existing clients also expanding, and their their UAE corporates also expanding. So we will be keeping a blended of 85% of India and 15% to exports, and take this 10% to 15% in 2 years from exports.
Okay, Mr. Chauhan, so considering that, your exports will rise going forward, do you expect a change in your margin? I know that you've given a guidance of roughly 7 to 8% in terms of your gross margins, around 5 to 5% for your EBITDA margins. But do you think that your EBITDA margins will cross that 5.5% mark because your exports will go up significantly?
So we are concentrating on many verticals. We have launched many verticals. After the fundraise, we have infused fund in 18 karat rose gold jewelry, white gold jewelry we have launched. We are concentrating on studded diamond jewelry, natural diamond. We are looking to introduce lab grown also in future, just having a look what the market is responding to the lab grown diamond. So we are expanding in many verticals. That will bring us blended margins. So we are expecting to improve the margins from 5% EBITDA to 5.56% in coming 3-4 quarters.
Yeah, so 2 years down the line then?
So I'll not give you the perfect number, but we are expecting to improve 0.5% or 1% from there, from the existing. Yeah.
Okay, and that's over and above 6%, right? Okay. Mr. Chauhan, since you mentioned about lab-grown diamonds, I also want to understand that lab-grown diamonds and moissanite are the two things that are really picking up. I want to understand what are the kind of demand trends that you have observed, because you've actively been studying this space as well.
So both, you have a good question that moissanite is also working in India. Women are liking moissanite jewelry because it's a replacement of diamond. It is made in laboratory, but moissanite has its place. He's working on his place, but lab grown is a new talk in the market, buzz in the market in US and Europe. It's a very good response of lab grown diamond. But in India, it's a mixed view. Some of the clients are telling that natural diamonds people want natural diamond because it's a luxury to wear. They want the resale value. Lab-grown gold doesn't have the, but of course, we cannot deny that lab-grown is not picking up. Lab-grown is started picking up, and we are also closely looking into it and having a wait and watch position. We are in a wait and watch position. As soon as we get the data that lab-grown is picking perfectly and a customer are accepting it, we are also planning to enter into it, and we are into making a samples for them for lab-grown diamond. And I think Indian government also inspiring for lab-grown diamond because it is made in India, so we don't have to import much natural diamonds. So we are also in the path. If natural diamond is growing very good, we will be launching in 1 or 2 quarters.
Right, and since Trent is entering into the lab-grown diamond space, we know Tanishq and Titan is not, but Tata is entering into the lab-grown diamond space via Trent, and you've recently onboarded Caratlane as well. Are there any talks with Trent going on to enter the lab-grown diamond space from your end?
Yeah, so no talks with Trent because we are not into lab-grown diamond. We have not made a single sample. Also, we are just watching the market, and we have started seeing getting the data of the market, and we are planning to make some samples in 1 or 2 quarters. Whenever the product is ready, we can approach them and show the product. Before that, we have not approached them, but we are into a mindset that we will go into lab-grown diamond in 1 or 2 quarters.
Okay, Mr. Chauhan, in terms of gold price fluctuations, we've seen a lot of volatility when it comes to the gold prices. What is the kind of hedging strategy that you have in place?
Yeah, so we have a hedging team inside. So we hedge every sale and purchase of our bullion or our jewelry is hedged in the MCX. So totally our inventory and sale and purchase are hedged. So we are not open to the market. So because of the huge inventory we hold, so we cannot keep it open. Going back to the margins, as the gold rates, gold is appreciating assets, it goes up every time. So as the gold goes up, our marking charges also goes up because it is in the percentage, so we gain much. But other side, we have expenses, other expenses or employee costs growing up by 10 to 12% yearly. So we get absorbed it. So it's the same. Yeah.
Okay, Mr. Chauhan, one last question before I let you go. You've launched your new app and you're running trials with respect to that. What's the kind of response that you've received and how is the progress there?
Yeah, already we have made the app and we have launched it, and we have started getting the order from the purchase managers, store managers and all. It is in an initial stage. We are going to add the AI technology also in that. So we are into talks with them. So in 1 or 2 quarters, it will be full-fledgedly available for all the clients, and we'll get a major order online. We are targeting that whichever our revenue is coming, 30-40% orders should come on online only. So by March quarter, we'll be on track. Yeah.
Well, such great insights, when you speak to management to kind of round up this conversation. 4.5 on 8 where Sky Gold is concerned. Just 2-3 things I'd like to highlight here. One, the book value of the company is 254 rupees a share, and therefore the stock trades at 18 times in terms of price to book. It works at 83 times price to earnings. Good return ratios, even though they're falling, but it's something that concerns the ratings because your return ratio is falling, not really helping. But with that, I hope this was an extremely productive half hour. Hope to see you on the next one. Stay tuned to NDTV Profit. More action on the other side.